consideration, guys, is that these weekly webinars do occur every Tuesday at 5 p.m. That's when I will be keeping them going. And so welcome to everybody that is here. If you guys don't know how I construct these webinars, this is a webinar in which I break down all the dollar index pairs from top-down analysis, giving you guys a good idea of where we could potentially expect structure to move from a longer time frame perspective and a shorter time frame perspective as well. And then from there, we do any questions and answers that you guys may have. And so with that, guys, if you guys do have any questions, please just put them in the chat room as I go through, and I will get to them at the end or write them down or simply just remember them until the end. And so I'm really excited, guys. We got a lot of interesting things to go over today, especially for what's going on this week and to talk about in reference to the data. But what we're going to be doing, guys, once again, is we're going to be going through the dollar index plus these 6 other setups. I don't trade Swiss francs simply for the fact it's not a structure that I ever cling to, and more importantly, it's not something that I think is technically nice to trade. Some people like it. It's just not something that I'm favored towards. And so the reason why, guys, I only trade dollar index pairs, if you're new to these webinars, is simply for the fact that that is something that I became accustomed to when I first started out trading, and then as I went full-time and through the years of trading, it was just something that I stuck to. Dollar pairs for me are the more stable and sound pairs, may not be the most aggressive or volatile pairs out there, but they are the most technically sound in my opinion. And so they do allow for finding entries and exits, establishing highs and lows and things like that much easier than other pairs. And so with that, guys, going straight into this week, what we're going to be doing is we're going to go straight from the dollar index straight down. But one thing I want you guys to take a look at real quick and go over a concept that, you know, we typically don't get weeks like these where we have a tremendous amount of news coming out, okay? And the concept that I want to go over is trading really, really smart trading in instances like this. Reason being is because these are the weeks where people will blow up accounts for the sole factor that, technically speaking, structure will look great. It'll look sound. But because there's just so much data coming out, you're going to see random spikes of volatility followed by long periods of consolidation leading into the next pending data that is to be released, right? And so a lot of people don't know how to trade those types of structures. And unless you have a really good understanding of price action and understand, you know, what is occurring within the markets, this becomes very complex and very difficult and very frustrating from an emotional perspective. And so honest recommendation is if you're not used to it, don't trade it. Don't trade it in general during news, but be very, very careful. To be completely honest, the only people that you should honestly see winning this week on Instagram are intraday traders. If anybody that is swing trading says that they've took a trade this week, I don't know how. I don't know how. Unless they got that on Sunday, they're able to move, unless they state that they moved it to break even, everything is risk-free. Swing trading in an environment like this is very difficult. Hence, you know, sometimes it's simply better to sit on your hands and wait, right? And so, you know, if you see anybody, you know, saying that they swung positions this week, that's probably not true. But intraday and scalpers, they have the advantage this week, and so it is what it is. One thing to factor in is that the intraday and scalpers, the reason being is that they could take a short-term entry, move that to break even, reduce their risk completely associated to them, and then run it through the data. And if it pushes through, great for them. They get a nice big push. For us, we don't really have that much room, right? Our marginal room for error is a lot bigger compared to the scalpers. And so, you know, they have very tight areas they're playing in. So with that, guys, going over this week, be quite careful. Don't be surprised if you see random acts of volatility or spikes, right? Ideally, if any trades are going to be taken, it's going to be after Wednesday. Why? This is the big thing that everyone's waiting for, is what are they going to say? This is already priced in, so don't automatically assume, oh, dollar should just, you know, rise, because if anybody remembers the last time Bank of Canada raised rates, right, everybody was expecting for further continuation to the downside, causing appreciation on CAD. It was so priced in that we just saw a 200 pip wick and literally close like that, right? And so even though that they're going to be raising rates, it's priced in. So really what it comes down to is, what are they going to say? What's going to be said during the press conference? And that'll dictate most likely the remainder of the week in reference to dollar pairs. Now, once again, you do have a tremendous amount of news coming out on 5 of the other pairs. And so with that, it makes it quite difficult. Maybe New Zealand and CAD is the only pair that you guys could trade comfortably from a dollar pair, and maybe NZD CAD, simply for the fact that you will have high volatile data. Now, that's not to say that you can't trade. Let's say you got AUD coming out Wednesday. This will probably be ready by Thursday, London morning, my time. That's Eastern, around 2, 3 a.m. That you could probably take because that'll be released and probably will set up for London. And then pound, you probably don't want to touch it all till the end of the, probably don't want to touch pound till next week. And then euro again. So you're really not touching, you could actually, you're good with all the oil pairs leading into the remainder of the week. And then I wouldn't touch anything else only because you got this and you got this. So the best pairs, the best setups you're going to be looking at are probably NZD, AUD, and CAD after Wednesday at 5 p.m. simply for the fact that you have about 48 hours of leeway to potentially get a trade. Now, if you guys want to know personally what I would do as a full-time trader, I might not even take a trade this week. I don't feel rushed. I don't feel like, I have to take a trade. If the setup is so damn good, then yeah, I'm going to pull the trigger. But if it's not something that I feel comfortable pulling, then I'm just simply not going to take it. I'm going to wait on my hands, and then, the following week, I'll see what structure does in fact give us. And so with that, let's see here how we can see how from the longer time frame to start out with the dollar index is setting up as of right now. More importantly, let's see how the text could potentially factor in what could happen tomorrow around 2:30 in the afternoon Eastern Standard Time. So one thing to factor in, guys, is that we are in fact now decelerating off of this previous dynamic support, rejection zone, whatever you want to call it, and we are starting to see some type of rejection, which was expected, right? Simply for the fact that we were stating that this was all going to be treated as relief, liquidation, correction, simply for the fact that we are stating the momentum is still to the downside. Unless we crack that 94.15 handle, which is what we've been stating for a very long time, you are still sell biased, and any bullish movements to the upside are treated as short-term and higher risk. Now, one thing to factor in is that this is quite interesting in the sole factor that it's not that this is weak. It's not saying that, oh, you just take sells automatically. It's just stating that we are showing some type of deceleration, but the deceleration could be from the bullish momentum. And so there's no clear signs right now. So we are in a very tricky area, hence let the news create the direction and then let the text take it there, right? And so pulling it to a weekly time frame as of right now, all we can state in reference to this downward momentum is that it's going to be relief. This is all treated as relief for potential continuation to the upside. But there's no real bullish momentum going to occur until you definitely crack the 95 handle. Once you see that, then you could say, you know what, this momentum to the downside, that is now warranted as invalid. And so you're actually looking for this, that actually complete. If this starts to flag out, that might be the inverted head and shoulders, that being the neckline, and you could potentially target all the way back to the hundreds, stating that this was a false break. But as of right now, you're simply stating that, you know what, this is quite impulsive. We would expect a further correction back to the downside, potentially back to the 91 handle, still treated as relief for potential continuation to the upside, unless we do in fact break back below the 90-26 handle. If that's broken back below, this whole thing's done, and you're still targeting the downside, right? That was a pretty bad drawing. Apologies. And so looking at it from a daily time frame, guys, right now, once again, there's no clear direction on any of the pairs across the board. It's simply waiting for a catalyst to act off of. There's no big money in the game. The liquidity is dry. The volatility is as well. So looking at it, we haven't seen any significant movement within the dollar index, false breaks of that 94.15, which is understandable. We do have monthly resistance sitting right there. And so looking at it, guys, as of right now, we can see here that structure is looking somewhat in a relief stage. And this is interesting. Even though we falsely broke, you have to look at it in two ways. You have trend one, then we falsely break, and this could be treated as relief, or you're going to state that this is the impulse and this is treated as relief for further continuation down. And a lot of people will be like, okay, well, that's really confusing and subjective. Which way are we going to go about it? And I'm just going to simply state, okay, take it one way or the other. Just wait for the lows to break. We'll wait for the highs to break, and that will be your definitive direction, right? Because trying to figure out the impulse and trying to figure out what type of environment you're in becomes way too difficult, right? It's just simply saying, you know what, we falsely broke the 94.15 handle. It is what it is, but we're still holding that 93.30 handle. So you know what, definitely range bound as of right now. No need to try to figure out which way the direction is. Either we break the lows, or we break the tops, and we continue from there. So taking a look at the 4-hour time frame as of right now, definitely descending, but not forming continuation, forming reversal. What was that? I have no clue. Sorry about that, guys. And so Looking at it as of right now, there is a couple different ways the dollar index can come about. And let's take a closer look at what's been going on at first. After we broke this high, we made a strong impulse to the upside. But this initial impulse caused a huge reversal pattern, not a continuation pattern, which did cause this sharp movement. It was quite interesting to look at this, guys. It's almost as if when the impulse was made, market makers drove this straight into the monthly resistance, and they knew that only something from fundamental standpoint could break something like that, right? So that was, clear signs of stop hunts and things like that. And you can just see how the formation was going to form about, right? Continuation forms with an impulse followed by a downward slope to see further continuation up, creating your higher lows and things of that nature, right? But in something like this, you didn't see that. And so that was obvious that we were going to saw an impulse. Now, we did see somewhat of relief, but notice the entire movement. Now we're in the same thing as there again. So as of right now, the news could go either way. Because if you look at where we are, we could potentially be creating a structural retest of the previous low that we are broken. Shout out to all the students who know what I'm talking about. At the same time, you do want to factor in that you are only sell bias. That's a given. You don't change your direction just because the environment is telling you at some point you should pull, liquidate or pull back. It's just simply telling you, keep it in mind. And therefore, even if this is a really sound play where it looks that we have a beautiful impulse followed by a nice relief for further continuation to the downside, this could simply crack to the upside, falsely break the monthly resistance again, or not falsely break, actually break above this time, and then from there rally back to the 95. It's very possible, only because of what the environment is showing us. But this movement won't happen until we do crack back above the 94.15 handle. You just want to basically take a look and say, okay, this is ideally what I'm sitting in as of right now. And so we look at it, there's two ways that's going to come about. We are stating that, the sells right now, they are going to be short-term until you see that 92, 30 being cracked right here. Once you see that, then this equates to a long-term trade, right? Then at the same time, you are stating though the buys, those are short-term as well, simply for the fact that the overall momentum is still to the downside if you do take a look at the longer time frames. Unless we do start cracking the tops of that 94.15, let's say on a weekly time frame, then they turn into long term. Hence, everything and all, that's why I sent all the setups there, becomes short term. And so with that, two ways that we're going to go about this. Either A, that's the impulse, therefore this is all the relief. Once that previous low does in fact get broken, we're going to look for a small pullback and start to run that potentially first to the weekly support and back down to the 93 handle. Now, failure to do either will state that, we are going to either range or we will break out to the monthly, probably reject, make a small pullback, and then from there rally back to the upside. But one thing to factor in is that there are no buys to be taken until you are back above the monthly. Same concept again. You don't want to be taking sells. I mean, this is a decent room to move, but you don't want to be trading sells until, again, you crack below, right? And so looking at it as of right now, these are your two potential short-term scenarios that can come about. Now, looking at it from a news perspective, the news is stating that, there's either way that we can move as of right now. There's no clear definitive direction. Momentum does state that we are still looking for downside, but the environment is telling us that, we need to make a bigger pullback. Now, even if it does make a bigger pullback and it just keeps pulling all the way here, as long as it's not clearly breaking this is still treated as a correction, and you're still looking for downside to the weekly and potentially even lower. And so bringing that to the, to something like EU, which is a direct inverse, right? Looking at it from the monthly time frame, we are finally pulling off. And as I was stating before, guys, and we're going to go over this on the weekly time frame, a trend is not a straight line shot, but rather a consistence of highs and lows. Even though we broke out of that sending trend, the reason why this didn't continue to drop is simply for the fact that that low was never broken. A trend is not a straight direction. It's a consistence of highs and lows. Yes, we broke the first low here. One could argue this was just a zone play, a range play, whatever you want to call it, and we simply moved to the next zone. We can see here in the past that, the bears did in fact own that area. Once we broke out of a 3-year range of consolidation, the bulls have now taken over. It's not to state that this momentum is invalid, but it is to state that it is understandable if we expect a pullback. And so looking at it right now, we can see two things here, and we're in two very critical areas once again. You look to the past here and you can see that we did create a structural retest here, but one could also state that you're creating a structural retest on the floor, right? Interesting. And so tight becomes really, really tight because, when you first break out, these become free flowing trades. And that was something that we were calling once we broke out. We said, you know, EU is going to tag 125 and pull off back. And so that was something that was easily said simply for the fact that when you're breaking concrete areas, you're going to go. But once you return back into those concrete areas, it becomes way more difficult to establish because it's not that this momentum is finished yet. You have to break back below, right? Then you could state that's over. And so that's why it becomes a little bit more complex when looking at how are we going to, you know, look at EU. Hence why I state all the time, look at short-term movements. Now, looking at it, is this to say that, you know what, the behavior is this is all treated as relief for further continuation to the downside? Possible. But when something like this breaks out of a 3-year range, right, it tells me that we should make one more leg to the upside. It's not stating that the bear momentum is done, but I still don't think that this will break just yet. I would like to see from a fundamental standpoint what's going to happen, but look, I will trade what I see, not what I think, and that's what my team will do as well. And so looking at it from weekly time frame, let's go over what has happened just from right here. We can see at first that we were in a range of consolidation in which when we did in fact break, momentum retest, pullback, structural retest, continuation up, right? Now, some are stating that this would be a structural retest. It is possible. But as of right now, you do need to factor in that all the momentum is to the downside. So I'm not going to state it is a retest just yet. But if you look left, this is the first time that structure has in fact come back to test that previous low that it did break. People say first time. This is one movement. This is the first time we've seen the retest. And so looking at it, it becomes quite complex again. You have to trade within the range, but the safest plays are above or below. Now, some might say, well, can't you trade within here? Yes, this is free space. But once again, trading buys within here becomes short-term and higher risk simply for the fact that that initial impulse is to the downside. So any bullish movements to the upside are treated as short-term. You have the first level being there, which potentially could create a head and shoulders pattern. This being the neckline right here, right? Now, if that doesn't happen, it doesn't necessarily mean the structure is invalid, simply for the fact that this could pull all the way back into here, create a structural retest off of that, create a lower high, and start to rally down. The head and shoulders is still not even invalid still then. So a couple of different scenarios that can play out, hence be quite careful. Brings me back to my original saying of this is where people, you know, they blow up accounts in weeks like this. Because there isn't a clear direction right now. But if you have a very good understanding of price action, you're good to go. And so looking at it, two ways that we could potentially see structure move out. Let's first break down what had happened within a smaller range perspective. So we can see here that broke that low, made a very strong impulse to the downside. But remember, this is one straight shot of a movement. Hence, we would not be surprised if this retests and drops one more. That is very possible. This looks all as liquidation. But looking at it from a smaller time frame, and this is what I'm excited to release to the full volume training course this week, is the two phases, not the two phases, the phases of a trend, right? We do have two types. People would say that this is one push. I agree with them, right? But at the same time, you do have two pushes within this, right? And at the same time, within this, if you look at the smaller time frames, there's actually 4 pushes within the 2 pushes on this. And so it states, you know, should we come back to here? Not until you see a clear definitive break above that and validating trend number 1. And so looking at it as of right now, very, very difficult. Structural retest potentially of that low, creating a lower high, warranting this as relief for further continuation back down to the lows, creating this a 1, 2, 3 pattern, potentially breaking the lows to start a new one. But if that doesn't happen, we're just going to stay range bound between, let's say, the 17.28 handle all the way up to the 18. But looking left right now, guys, you can see that there was a lot of consolidation that occurred within here. So potential choppiness can occur within here as well. Now, once again, guys, like I said before, once we broke out of this reversal pattern, the bullish momentum and how strong it's going to be dependent on how big of rallies do we make. If we start to make small consolidated rallies like this, you're expecting the drop at some point. But if that doesn't happen and we actually start to rally large and make considerable pullbacks and still continue to rally with bigger continuations in the pullbacks, then yeah, we potentially could rally back to the tops. But looking at it from a 4-hour time frame perspective right now, what we can see here is we can see that structure is in fact range bound. You don't necessarily need to care about anything above here right away, only because we haven't, broken into that area. You only care about that area once we're there, right? Because you look at it, there are two areas that we're sitting in as of right now. We have one, and then you do have this previous high that we would potentially tag, and then of course the last low sitting here. And so looking at it as of right now, until we break out of this range, that's all you really care about. And so let's take a closer look at this, and we can see right now that a couple of different formations can come about. Once again, guys, as I say before, trend is not a straight line shot, but a consistence of highs and lows. I created this dotted line here precisely for that reason. I want to show you guys how even if a trend breaks out, it doesn't necessarily mean that this should continue to the downside, simply for the fact that this is the last low, hence that needs to be broken to create lower lows and warrant a shift within momentum. Failure to do that will state that the momentum is still favored to the upside. So looking as of right now, let's break it down. We do start with an initial impulse followed by a huge stage of liquidation and profit taking. Now within that stage of liquidation and profit taking, we do start another impulse warranting that this flag is now no longer to be treated from a bearish flag and rather, right, that we should be looking this at more of a deeper correction. Now, one thing to take into consideration is that even though this is still in power, right, you have to factor in that we did break out. We did create short-term higher highs, warranting the shorter-term momentum is to the upside, treating this as relief, potentially. And so if you see a break at the top, small pullback, you could see a rally all the way back to the weekly resistance. Now, one thing to factor in is that if you do get beat up within this area, and when I mean beat up, have rejections and things like that, don't be curious why, because you can see there was a lot of bullish orders sitting here. The bears will now take over. So if you see something like that, don't be confused. But anything above that, and you should be golden. So most likely you're going to want to see a big break above that daily resistance, some type of small pullback continuation, and then start rallying it all the way back to the weekly resistance. One thing to take into consideration is that this will be treated as relief for potential continuations all the way back down, right? You have to factor in that this is your key area at 122 handle. That is the decider between, does this still stay intact, or have we now stated that it is no longer valid? And so if that bullish momentum doesn't come about, and let's say we do get capped within here, and it could even break out and do that, but let's say it starts to drop and breaks this low, you would look for a small pullback. And then from there, you could try to run it to the monthly. But the real play is below the monthly, strong pullback, and then run it to the weekly support. This is your free trade. This might incur consolidation. Look left, right? You don't want to be dabbling in that. This is a possibility. Now, if it doesn't flag out like that, and let's say it doesn't reach the tops, it could always, this would be the last low. We would want to see a strong impulse below the monthly, below the weekly. Don't let the buyers creep in. Then from there, look for some type of continuation, and then from there, run that straight back down to the weekly support. That is your ultimate goal. Failure to do either would just result in consolidation. That's not something you're interested in. And even if you break below here, look left, that's not something you're interested in either. Below that or above that is free range trading. Okay. Now, pulling it to USD CAD. Let me take a sip of water, guys, and we're going to go into this because this has been a pair that has been beating everyone up, and we're going to go exactly to the reasons why. All right, USD CAD. The reason why USD CAD has been consolidating so much is for two reasons. It's a battle of the retail traders versus the institutions, okay? If anybody's aware from a fundamental standpoint, the Bank of Canada would like to see their currency around 119 to 121. That is the ultimate goal. Now, if you take into consideration how the techs are factoring that in, you can see that, you know what, the Bank of Canada is doing precisely that. They're showing from even the technical standpoint that the policies that they're implementing will allow for appreciation versus the US dollar, as you see with an impulse, followed by a nice stage of liquidation, healthy for the economy, followed by another continuation, followed by another relief. So it makes sense why they want to see this. It's structured in their own asset, right? And so once again, if this is the case, who's trying to get that there? Well, the big players, the institutions, the funds, the banks, etc. But since dollar has been rallying and the REITs and the institutions have been trying to size in their position 1,000 times, It's the biggest mess of all. And everyone's always like, well, I have no clue why UC is acting the way that it is. Well, just do your due diligence and try to figure out where do the, banks want this to be sitting at, for what reason, right? And so, that's completely understandable now of, well, why, structure is consolidating and whipsawing in the way that it is. And so looking at it from a weekly time frame perspective, even though it looks like we could potentially be breaking out, we should be holding that. Sorry, guys, but I'll keep that there for now. Let's put that there. There we go. Okay. So even though that it looks like we're potentially breaking the highs, this is not something that you want to dabble with. This is very decelerated. And you guys would be like, well, this is an ascending channel. How are we not looking for buys? You have to look at the bigger picture. That's the smaller impulse in which once that cracks, you're looking to tag that and potentially rally all the way to the downside, getting a movement like this. And looking at it from a bigger picture perspective, you want to look at it from this is what you're working with right now. This is all a state of liquidation. At some point, you're expecting that again. Hopefully, when we break out of this, we actually get this type of rally. But it's very possible that we just simply pull back to here, pull back, and then drop one last time. But looking at it from a daily time frame perspective, you guys need to make sure that you guys are looking left and making sure that structure is showing you and leaving clues for you. Because if you're not, you guys are going to be, in an emotional roller coaster. Looking left here and notice this, pending orders are bullish, right? A lot of buy orders. Bears break really hard. This becomes a bearish territory now. The bears own the market. And so don't get confused on why, you'll see a lot of rejection. Now, looking at this, guys, from a daily perspective, you want to look at what has happened in the past. Once we broke out, notice that occurred there. So don't be surprised if you're seeing this. It's been a very choppy pair because you have to remember there's so much money on top, so much cash here, right? And so because of that, you don't want to be dabbling. There's simply two ways you're looking at this. If you're going to try to take it above the monthly, you better see a hard break above. That's got to push really, really hard above. And then from there, look for some type of relief and then take it back up. If that continues to go, that's not your trade. At some point, it's going to liquidate and let them run it through. Let them prove to you that, you know what, this is no longer valid. This is done. And if that doesn't happen from a daily perspective, it might rally, cap from here, and then drop. That's very possible as well. This was a very strong movement, and this was very aggressive, right? And for that to drop that hard, it just tells you how much power there is from a capital perspective. And so if that doesn't happen, we're going to state, this is the impulse. This is definitely the relief. Last low sitting right there. That's where your initial sales initiated. That's the next. Sorry, guys. So that's the next base sitting right there. And so once that indefinitely does crack, that's your free ride straight down to the weekly ascending trend. Now, your goal is to hopefully break through that whole thing and get that massive impulse that we're stating. But we won't know that until something fundamental plays out. But if this does, in fact, break out, this might be the trade for you guys to keep running all the way to the downside. Now, pulling it to the 4-hour time frame as of right now, guys, simply two ways that you're going to be looking at it. Either A, you're going to break above the consolidation, or B, you're going to break below the consolidation. Failure to do either is not something that you're interested in. You want a strong impulse above, let it clear, small continuation, and then let it rally back to the daily resistance. Now, if that doesn't happen and you look left, right, you could get capped out. If that does break out, could pull back. Be careful. See what it does here. If you take this, remember this is not a continuation but a reversal, so I would potentially close, wait for it to pull back, and then rally from there. Now, if that doesn't happen, some would say, can we take a trade like this? It's possible, but it's not worth running it through there. It's not worth that. So what I would wait for is a strong enough impulse down, let it crack straight through. Let it liquidate a little bit, and then from there, start running that straight down to the weekly support. That's your trade. Ideally, we want the sells. But you know what? We trade what we see, not what we think. Failure to do either, you're sitting in a range of consolidation. That shouldn't be something that you guys are interested in. Next, USD yen, monthly to start. Very, very critical once again. A lot of people are stating, you know what, that break was in fact false, but please take into consideration what happened in the past month. We did see a very bullish rise followed by a huge wick and bearish pushback to the downside. Please factor in that there are a couple of movements within this play. After we made this big rally to the upside, we capped and then we formed this very strong base, which the BOJ have found that they like quite a lot. And now, where it starts from is that this was the initial impulse. Once we broke that lows, that impulse came invalid short term. But since we in fact held the base of where that impulse started, doesn't mean that the impulse ever really went away, just short term it did. Then from there, you look what happened again. We did make another rally to the upside, which was understandable why people were saying we could look for the long at that time, right? But since we did in fact break those lows here, this does now become invalid, which is why we stated all bullish movements to the upside should be treated as short-term in relief, because we are expecting one more rally back to that 100 handle, and then from there we are expecting that to start up once again, stating that this is just a massive flag for one more rally back to the tops and potentially to break the tops. You have to remember the yen right now is structured for appreciation. You're looking at it, right? And so, yes, we are at a critical area around the 130, 140. I know I'm talking big numbers here, but looking at it from 2012 up, we are structured for appreciation. And so, long term, short term right now, you're still looking for downside. One thing to factor is that this is nothing to say that we're moving into a bull market as of right now. This is what really fell, broken that previous low and this, in fact, low. Now, doesn't matter which low holds, as long as the first initial low that got broken does hold, you're still stating that, you know what, this is correction or relief for further continuation back to the downside, warranting that a 1, 2, 3 pattern, potentially even running it lower to the 100 handle. Now, looking at it from a weekly time frame perspective, you are still short-term looking for buys, but I don't know if you guys want to A, deal with that, and B, deal with the monthly resistance sitting there. I was just stating you're looking for buys just because of the initial momentum to the upside. Now, one thing to take into consideration is that this is range-bound as of right now, sitting at the 108.64 handle up into around the 111.22, 25 area. Now, two things to factor in is we did create a structural retest with this pin bar here, but at the same time, we are going to state that, you know what, this is what we care about more, right? Simply for the fact that this is the impulse, this is all treated as relief. And so looking at it from a daily perspective, what we are going to be looking for is, does structure in fact now start to falsely break or reject the monthly resistance, creating a short-term retest that previous low that started that impulse, making this all relief. Once that low does in fact break, we should look for a small pullback, and then you can start running it back down to the weekly support and potentially even all the way down to the monthly support. This is potentially creating a really nice head and shoulders pattern, with the 108.64 being the neckline. Within that, you're seeing a lot of confluences for bearish momentum, right? So looking at it, not stating, it doesn't matter what I think in the confluences that state the bearish momentum, you're not going against the trend. So, but what it tells you is that even though you have such outliers there, like the monthly resistance and things of that nature, you don't necessarily want to potentially be looking for even buys, even if the trend tells you for buys, only because, you know, you can see what has happened in the past. We broke above and then we broke back below, right? And so warranting that this is a very critical area. If you look left here where that monthly resistance kind of was sitting, this is actually a very strong area, previous dynamic support. We definitely are going to assume that there are some bearish pending orders, in which if this does continue to flag out and we start to come above, we wouldn't be surprised if we reject. Shouldn't have gotten rid of that rectangle, sorry. And then from there start to drop. Once again, this would be treated as a reversal pattern, and so that would be understandable why after that impulse was made. Now, if that doesn't happen and this does just simply sit range bound, you're not interested in that, and I would simply not trade that. But your sell as of right now is going to be warranted by first an impulse to the downside, followed by a continuation pattern. Whether it pulls back to these lows, it doesn't matter as long as we do not crack above this previous 110 region. And then from there, you're going to look for that to break out, start running into the weekly, and potentially even lower. One thing to factor in is that you are range bound within the bigger picture. And so even if that relief correction, whatever you want to call it, does break out, you're still trading within these highs and lows. So if we break out, pull back, doesn't matter where we pull back, your target is just back to here because this is still in control. But if this does break out, that's not really a trade you want to take, only because you got monthly resistance, you got the weekly descending trend line. If you look left, there is definitely bullish pending orders. So now there's going to be bearish pending orders after we broke through this. And so it becomes a much higher risk exposed trade and not something that we should be interested in. but it's still viable if you want to take it. Next pair, looking at pound US dollar, starting off with the monthly. I think this is really just going to tumble all the way down. I'm really sorry to all my UK guys out there. If you can move cash to a US bank, I'm just kidding. But I mean, as of right now, we are pulling back. But looking at UK economics as of right now, you can see we'll start with a huge and massive drop, followed by a nice big liquidation and another drop. And within that, you saw small continuations. And then from there, we saw a nice little relief. Now, a lot of things have been breaking out of the trends, guys, but doesn't matter because it doesn't warrant the trend to shift or the momentum shift. Yes, this low broke, but this is the major low that has to be broken to definitely say, let's go tag that, and things of that nature. But as of right now, because of that, it made it quite easy to see on the smaller time frames, the weekly, the weekly, to see that we could expect some type of pullback or relief after that initial impulse to the downside. You see this, look left, and you guys can see that there are pending orders, resistance and support, and things of that nature. And so once we broke, that does in fact become newfound support. We did in fact start to bounce off of that. Now, one thing to take into consideration again is that this did take some time to get up there. This whole movement basically engulfed this rally in about 13 days. And so we are sell bound as of right now, meaning that all the bullish momentum trades to the upside are going to be short term, moderate to higher risk, and all the sells are going to be long term and low to moderate risk. Now, one thing to factor in is that you will stop buying pound once you pass the 137, 138 region, simply for the fact that this continues to move up. And let's say breaks above, you will no longer buy pound, simply for the fact that you don't know if this is going to be invalid or start to reject and start to drop off, stating that this was just all relief and then we had a false break there. Now, pound could be potential short-term buys, but you are looking just to run them short-term because at some point you are expecting that to kick in again. Looking at it from a daily time frame perspective right now, we can see that at first, after we made the initial impulse, we did form a reversal pattern, right? But from there, we created consolidation, drop, making this a more extended and complex structure. And once we broke out, creating a short-term relief, now warranting this as correction and no longer telling us that we should pull back. Now, one thing to take into consideration is that we are in two very critical areas. We did in fact break the lows of this previous consolidation, and you can see to the past that this did in fact have some tough time to break above. And so with that, we can expect structure to start to wick off or decelerate after pulling back. And so if we do in fact start to break out, could potentially test that weekly support at 132.20, and then from there potentially breaking even lower and going all the way down to the monthly support at 127. Now, if we do make a strong enough impulse above previous low that got broken back to the weekly, then you want to see a small continuation. You could potentially start rallying that back to the weekly and potentially even further to the monthly, and then creating a structural retest if you look left of that monthly resistance, treating all of this as potential short-term relief for another continuation back to the lows, unless we broke above, stating that this is now invalid. But that is not something you want to be trying to trade. You want to be trading the relief to see continuation back up. You want that to prove to you that this is no longer in power, right? You want to state that, you know what, we should definitely see continuation. So looking at that from a 4-hour time frame perspective right now, guys, it's unfortunate that we have so much news coming out because there's some really nice setups looking at this, but we can see here that we did have that initial impulse to the downside right here. From that, we did have a really nice state of liquidation and relief. You guys could have been taking these short-term buys in here. From there, we did form that short-term reversal pattern, and now we are descending. But let's take a look at the lows. First low that was broken was, in fact, right here, right? You could have stated was here. Either one is that given area where all the wicks are pulling off. And so could be putting entries within there, stops above here and giving it a shot. But the real low is sitting at the 0.5 fib level. We can see that's when this bullish momentum started. Hence, this could be treated all as relief if we do break out, small pullback, and start rallying back to the tops, potentially even further, right? So you don't want to have to try to figure out which is the direction. It's not necessary. And so you want to either wait to see these lows being broken, let it pull back, and start running that straight to the downside. Or see these highs broken, let it pull back, and then start running that back to the upside. Failure to do either is just something sitting in consolidation, and I don't know if that is something that you guys want to be trading in. Pulling it to the next one, AUD USD. Once again, just like pound dollar, it did break out of that ascending trend, but it did not break the last low. And that's what we were stating on the webinars for quite some time. Now, a lot of people are like, well, Albert, that's creating a last kiss. Sure, that is creating a lot more bearish confluences in which if we do break out, we could expect another downward movement. But you can see here in the past, and this is a photo that I posted on Instagram, which I think we did a really good job on, in which you can see here that there were a lot of pending orders sitting there. And so it's understandable on why the bulls were able to take over. It wasn't even the fact that the trend broke out. It was just the fact that lower lows were never being created. And so you can see in the past, once again, easier picture here on the weekly. You can see all the orders sitting within there. So it does make sense why we did pull off. Not to say that the bearish momentum is not in power, but it's just stating that, you know what, we could expect a relief after that drop for potential continuation down. Your real sell is not going to occur until you see a crack below the weekly support. Once you see that, you're looking for a pullback, and then you're looking to run that back all the way down to potentially even break the monthly support. We've been in this, you know, ascending structure for quite some time, and at the same time, we have been capped around, you know, the 80 handle, 82 handle, and so this is ideally what we've been in for some time. A lot of people would say that this was our level. Fair enough, I'll give you that, but just name me both. So, go into the daily. We can see here that we are in a state of relief or correction, treating all bullish movements to the upside as short-term, all bearish movements to the downside as long-term, lower risk, moderate, right? And so looking at it, we do see here, and this was, guys, something that we were calling for some time. After that impulse was made, this was a 3-month reversal pattern in which we finally got it. But now the momentum and environment has changed from no longer reversing, but telling us at some point we should start continuing all the way to the downside. Now, that's not to say that that's not going to be valid, because we did in fact create short-term higher highs, stating that the momentum is still to the upside. This could be treated as relief. And if we do in fact break above, stating that this is now a false break, we're going to look for some type of pullback or continuation and start rallying back to the weekly resistance and even higher. Now, looking at it from a 4-hour time frame perspective, we can see here that structure is consolidated just like most pairs across the board, which is understandable, in which it does make trading a bit more difficult if you're impatient, or it does make it easier if you're simply going to give a two-way bias, right? Why am I saying that? Because look, this could be considered the impulse, can be considered as all relief, and if we break out, could potentially rally back to the tops, right? There's a possibility. But at the same time, you could state, you know what, we have this, we have that, and we're retesting now, we could potentially start to rally back to the downside, then stating this is all relief for another rally back to the upside, because you have to remember that we are still ascending. And so in instances like that, let's not make it too difficult. Let's just say one way or the other. We either break the tops, followed by a small continuation pattern, and then from there run it to the weekly resistance, or we break the lows, small pullback, and then from there you could look to run it down to the weekly support, right? Failure to do either, guys, is not something that you want to be trying to guess and trying to trade, because look, we did in fact break back above the previous high that was holding this entire bearish momentum. And so either want to see cracks back below, or you know what, you want to say this definitely took over now. Let it break out and let me start going to the upside. Same thing with New Zealand dollar. We'll start for the monthly and go down to the weekly time frame. We are range bound, but more importantly, all of the impulse or all of the momentum is to the downside, right? So this is being treated as relief, but it changed from relief into consolidation. And you can see as of right here that we did just in fact become range bound. So with that, guys, one thing to take into consideration is that we did start to break above, creating short-term higher highs, stating that this is a buyer's market as of right now until we do in fact break that 67.50 handle. Once you see that, we should continue to the downside. Now, looking at it from a weekly time frame perspective, bears are still in power. Can see that that low was broken, warranting that as the initial momentum, stating this is relief, further continuation down, potentially to the lows. But until we break out of that ascending trend, we're going to expect structure to push all the way back to here. And then from there, we could expect continuation back to the downside. But, whoops, I don't know what happened there. Okay. Then going to the daily time frame as of right now. Complex, but not necessarily. This was pretty obvious that we should get at least some type of rejection. And at the same time, you can see that this was a reversal pattern after the initial impulse was made, breaking these highs. At the same time, you can see within the structure, we do have that momentum treating this entirety of the momentum as bearish. And so some of the guys actually got entries within here, which is dicey, but okay. And so I see why, because you could expect a potential rally down to the ascending trend and then potentially even lower. But the interesting thing is that even though I have a trend drawn in here, it is just range bound at the end of the day. It's just a base of lows and highs. And so it's just depending on how you want to be looking at it. I just like looking at it in this sense, right? But you guys could simply state, you know, we don't need these trends and we could expect continuation to the downside just by looking at the lows and highs, which is fair enough, right? But you want to be looking at some critical areas just to start off. You can see this high that was broken, hence stating that this is the momentum to the upside. But look at that. That's when we did break out short term. But once again, where's the last low of this ascending movement? And it's going to be sitting right within here. And so until we break that, you're still stating that this could be treated as relief. That breaks out for further continuation back to the upside. So it becomes quite difficult. So you're either waiting for the lows to break, small pullback, and then from there try to run it to the ascending trend. This is short term and much higher risk. Or you're going to expect this to continue to drop if that does in fact close below the monthly support. Safest plays are going to be below the monthly support, stating that this break right here was false, or if we do in fact break above the previous descending trend plus the consolidation box, and then from there you can start looking for your trades back to the upside. Failure to do either, guys, will just warrant consolidation, not something you should be interested in. Please factor in that the entirety of the movement is reversal as well after that impulse, not continuation. So if this starts to just drop, I would not be surprised. Okay, so looking at that, I know it's a bit tough maybe, but you do have two types of structures within here. You have a correctional movement that is telling you at some point you should expect the drop, but within that, after that bullish movement was made, this is stating that at some point you're expecting all of this to start coming down. And so with that, guys, these are the setups that I want to review in reference to the dollar index pairs. And so what I'm going to be doing now is I'm going to go one more time into the dollar index pairs. We're going to be going over it and we're going to break them down for the next 24 to 72 hours real quick to see how we can solidify an entry and exit. So I'm going to take a sip of water and then we will get right into it. And then from there, we will get into the questions and answers. All right, guys. So let's start from the daily. Actually, we'll start from the monthly. All right, guys. So just to repeat one more time what we are going to be doing, we're going to be going through the next $6 index pairs from top down for the monthly straight down to the 4 hour, trying to give indications of where price could potentially move within the next 24 to 72 hours. And then from there, we will be getting into the question and answers. So with that, let's get right into it. One thing to factor in, just like we've been saying in the past weeks, that we did in fact break above that 3-year monthly resistance, in which we did create a nice impulse to the descending trend line. One thing to factor in is that it was understandable if we were going to start rejecting off for a couple of reasons. We can see that that low was in fact broken. And on top of that, if you guys do look left, you can see that this entire base was where that previous dynamic support was acting, in which we could expect some type of bearish pending orders sitting there. At the same time, did make sense that, you know what, this could be treated as relief after that initial impulse, creating a lower high for further continuation to the downside, right? But one thing to factor in is that even though that this trend did in fact break out, a trend is not a straight line chop, but rather a consistence of highs and lows. And so until this low does in fact break out, momentum will still side with the bulls, but that is in a longer time frame perspective, right? You're looking at it from a shorter time frame perspective. You are still looking for downside based on that shorter term low being broken. Looking at it from the weekly time frame, the low that we are talking is being seen right here at that 121, 122 handle, where a couple of weeks were in fact broken. Like I said, buyers are still in power because this low did not break, but you are stating that momentum is still to the downside. Hence, any bullish pushes to the upside will be treated as short term because of stating that the bullish movements are going to be liquidation or relief. And any bearish movements will be considered long-term or continuation of the initial momentum. So looking at it from a daily time frame as of right now, there are a couple of different ways that we can see structure play out, but let's hop straight into the 4 hour just so that we can see it from a bigger picture perspective. And so one thing to factor in straight away, guys, is that we can see that there are two types of trends that we do want to look at. One, we can see that after we broke this low, we can see that this was the first trend that pushed to the downside before this nice pullback or liquidation. And then from there, we saw another big push. Now, one thing to factor is that all of this is be treating as relief or liquidation for further continuation to the downside. But within this stage of relief or liquidation, we do see a short-term bullish movement potentially being formed after this high was broken, creating short-term higher highs. Hence, this is being treated as relief. And so if we do in fact break out, pull back, once this breaks above the daily resistance, that is your trade. We must be above the daily for you to see any continuation above. Now, if that doesn't fail to do so, this could simply break above, and then from there start to drop below the monthly and weekly support. If that does happen, we still want to look for a small pullback, and then from there you could look for the rally back to the weekly support. Now, if that doesn't happen, guys, what we are going to be looking for is a strong push below the monthly support, followed by short-term continuation, and you could expect rallies straight down to the weekly support. Now, one thing to factor in real quick, guys, is that if you do look at momentum in its entirety, the last place that we are looking to buy EU is to the 121, 122 handle, because you are stating the entirety of the momentum is to the downside. And so if this keeps flagging out, it doesn't matter, because this is treated as relief or correction. It's just a bigger and deeper correction for potential continuation back to the downside, creating a structural retest. And if this does in fact break above, we will stop buying and let it prove to us that, you know what, this momentum is now invalid. But until then, any bullish movements to the upside, short term, any bearish movements to the downside, treat it as long term. USD CAD, one of the tougher pairs to be trading as of right now, simply for the fact that the Bank of Canada does want their currency sitting around 119 to 121. Hence, the institutions and the bigger players, the bigger cash, is sitting on the sell side of USD CAD, or the appreciation side of Canadian dollar, and on the retail traders, since dollar index pair has been moving to the upside, right? Retail traders have been pushing dollar up. So it's been a huge battle, causing a lot of whipsaws and causing a lot of stop hunts and things of that nature. Please factor in Canadian dollars economics just to start. Starts with an impulse, followed by a nice pullback or relief and another continuation. And then from there, we will see another pullback or relief, right? Now, one thing to factor is that you can look left, and once that low was in fact broken, we can expect now bearish pending orders to be sitting there, because the bulls did in fact own this area in the past. So the bears will in fact start to take over, as well as it does create a structural retest and a lower high on this descending trend. And so our goal is, hopefully, if this does break out, to get that big drop like we saw in the beginning of 2017. And so looking at it from a weekly perspective as of right now, we can see that structure is attempting to break above the monthly resistance sitting at 130.14, but please take into consideration that we did receive false breaks there in the past. And so one thing to factor is that this is a very decelerated and slowed and exhausted movement after that push was made. So it doesn't tell me that the buyers are in power. I'm still expecting that drop at least to that weekly ascending trend, and potentially even lower if we can crack below the monthly to see another big impulse like this. Pulling it to the daily time frame as of right now, guys, there are a couple different scenarios to play out. There's no point of even looking at the 4-hour time frame, simply for the fact that this is not something that you should be interested in trading in until we break above or below this previous area. So you're looking for an impulse below, followed by a small pullback, and then from there you can run it to the weekly ascending trend, or you are looking for a push above, small pullback, and then from there run it above to the weekly resistance. Trades must be above the weekly resistance or below the weekly support for you to be looking for any types of continuation trades, whether from a bullish or bearish perspective. Pulling it to the next chart, USD Japanese yen on the monthly time frame to start. Please factor in that there are two types of impulses being seen within here, since this initial impulse became invalid once we broke this low. This is market momentum, so therefore this is all treated as relief for further continuation, potentially to the 100 handle, in which we are going to expect that to start kicking in, treating all of this as a big flag for potential rallies back to the upside. Please factor in that the yen is factored in for depreciation against the US dollar as of right now. So just looking at this from a smaller time frame perspective, popping onto the weekly, we can see here that this, even though market momentum is ascending, this is quite decelerated or exhausted. And so with that, we are going to state that this is the first time that structure is now testing after it broke at the start of 18, creating a structural retest in which all bullish movements to the upside will be treated as short-term or higher risk, in which we are expecting continuations back to the lows and potentially even lower to that 100 handle, creating that a 1, 2, 3 pattern. Now, we're not stating that market momentum should just immediately switch, right? Because momentum is still to the upside. So if you do see a strong enough crack above the previous low that it did break around 110.48 to 111.22, as well as that monthly and weekly resistance, followed by a small continuation pattern, that could be a rally and start of that bullish rally. But as of right now, guys, you want to be looking at what's been going on within structure. And even though we broke out of that ascending trend on the daily time frame, a trend is not a straight line shot, but rather a consistency of highs and lows. So because we didn't break the low, market momentum should still continue to the upside. It's not to say that this momentum is still not in power, right? But at some point we are expecting that, but this still could happen simply for the fact that market momentum is ascending. Looking at it from a smaller time frame right now on a 4-hour perspective, we can see here that market momentum is ascending, but couple things can come about. And let's look at this from a bigger picture perspective. First and foremost, we do see a potential pattern being formed, which is that head and shoulders, in which we could falsely break the monthly resistance, creating a structural retest on the first initial low that we broke to start that drop. Hence, treating all of this as relief or liquidation for further continuation back to the downside. Or what we are going to state is that this will continue to rally to the weekly descending trend. And then from there, we're going to see what will happen. We will state that this is treated as relief. But if this does still continue to pop up, you're going to want to look for a small continuation and then start rallying that as high as you possibly can. But if it doesn't happen, you do want to see a sharp projection, falsely breaking that monthly resistance again, look for liquidation and start running that down to the weekly support. Now, if either don't happen, you're just going to see consolidation, and that is not something that you should be interested in. Now, some may ask, could they be taking trades on this basis at the low? One thing you want to factor in is that when we broke out of this ascending trend here, the reason why, not that one, this one right here, the reason why structure didn't make a deep sell is because we never broke out of where the base was formed after we created the first higher high. When we broke out of that consolidation. And so that's why, guys, even though you could potentially get a short-term sell within here, it's not worth trading or fighting that. Look left. You see the rejection? It's not worth dealing with that. Take anything below that and run it to the weekly support, right? Now, pulling it to the next pair, pound dollar. Starting on the monthly time frame, guys, let's just take a look at how pound's economics are structured. We can see a very strong impulse followed by a nice long stage of liquidation or profit taking. It's very healthy for the economies to be doing that. And so we did see another one, and within it, you do see small reliefs and pullbacks. But now we were in a deeper correction. Now, looking at from weekly time frame, a lot of people are saying, well, that weekly ascending trend broke on pound. We should be looking for the big sell and not right away. Even though that did break out, not a straight line shock, consistent of highs and lows, we simply just broke first low. So we simply moved to, as some would say, the next zone, the next range, whatever you want to say in the end of the day. But structure just gave us good clues of where it could potentially pull off from after this big drop to the downside, which made sense since this had a lot of previous bearish, now turned bullish pending orders or support. Now you do see that being pulled off from there. Now, pulling again from the daily time frame, we were in a reversal pattern, right? We did make an impulse. We were reversing for a bit, then we created consolidation and then dropped again, making the structure even more extended at some point looking for liquidation. We did now receive the liquidation, and so now we wouldn't be surprised if we saw a drop back to the lows and potentially even lower down to 127.68. But looking at it from a 4-hour perspective, there's no point in trying to predict which way it's going to be moving because there are two possible scenarios that can come about. This is the previous low. You don't want to be looking at that. This is the previous low in which structure potentially could be creating a structural retest on as of right now with that 134.80 being tapped, right? And then from there, if we do in fact break out of the 0.5, definitely stating that this bullish momentum is now invalid, followed by a small continuation pattern, you could look to run that back down to the weekly support, creating that a 1, 2, 3 pattern and potentially breaking even lower to go lower, creating that 3 turning into a 1. Now, if that doesn't happen, this could potentially be the impulse stating this all is profit taking, in which you could see a strong impulse followed by small pullback and start rallying back to the upside. Now, personally, if I was going to identify it, I would not want to be buying pound until we do in fact break back above the previous low that was broken. So for me, I would want to see a strong impulse above, followed by short-term continuation, no matter how far it pulls back, and then from there start rallying back to the weekly. I need to state that that is now invalid. If that doesn't happen, and we simply pull back, let's say we flag out, and we pull back to here, and we start rejecting, I'm still not looking for the buys, simply for the fact that this will be all treated to me as relief, and we could potentially still look for another drop because there are a tremendous amount of pending orders sitting there from the bearish side. Looking at the last two pairs, AUD-USD and NZD-USD, please factor in that even though AUD-USD broke out of its ascending trend, it didn't break out of the last low, hence warranting some type of pullback or liquidation, making it very easy to identify. Now, we are due for depreciation on AUD versus the dollar. You can see here that it's been capped to that 80 handle for quite some time, creating a beautiful flag or pennant, as some might call it. Now, Looking at it from a weekly time frame perspective, it's not to state that the bearish momentum in AUD is over, but this was a good area of potential pullbacks. Now, one thing to take into consideration is that it does take exactly 4 months before the big push does happen. That is from behavioral analysis. So if that does occur, I wouldn't be surprised, because it takes exactly 4 months from the lows before we start really rallying to the upside. And so that would be quite interesting if that does happen, but I don't see that happening as of right now. Looking at AUD on the daily, when it made its impulse, it showed a 3-month reversal pattern in which we saw one more sharp move before a liquidation phase, which we expected. But now we are stating that structure is no longer really in some type of reversal environment. Could be still, if you're going to state that that momentum is going to still continue to the downside, but it's a bit too tough to figure out as of right now, simply for the fact that we could break out and start rallying to the downside, or that could hold. And from there, we could start rallying back to the weekly resistance. So with that, guys, make it a two-way structure. We are range bound to break, let it break the tops or let it break the bottoms. Going back to AUD USD on the 4-hour time frame, looking at it, guys, simply two ways, just like I said on the daily time frame. We do have that initial impulse to the downside, which you do want to keep in mind, right? Treating all of this as relief. And so either you're looking for that ascending trend to get broken. Why am I stating that and not this low? Because you don't want to be trading within here. That's too critical of an area. Once that does break, look for a small continuation pattern, potentially retesting the daily support, which would be newfound daily resistance, and then from there look to run it down to the weekly support. Now, if that doesn't happen, guys, you do want to see a very strong break above, stating that the break of this previous low is now, in fact, invalid. And then from there, look for some type of relief profit taking liquidation and try to start running that back to the weekly resistance, okay? Now, failure to do either, that's going to range. That's not something you're interested in. Don't try to guess the movement. Let price prove to you it's going to move in the direction that you want it to move to. Last but not least, guys, NZD USD on the monthly time frame. We do see this initial impulse. Now, one thing to factor is that we were in a beautiful state of liquidation and relief until we did break that previous lower high, creating higher highs, stating that this is a short-term bit bullish market, but you have to factor in that this is having a very tough time breaking above, because you can see all the pending orders from the bulls that sat in the past, and once the bears broke through, they now take over. And so, you know, basic support, resistance, supply, demand, whatever you want to call it, at the end of the day, it's all the same. Price action is just price action. So looking at it from a weekly time frame perspective, you are range bound from these lows and these highs. And so within the range, you do see a short-term impulse breaking this, creating a short-term lower low, in which we are in a state of liquidation. The only bullish movements we're expecting back on NZD is back to the 71.58 to 72 handle, and then from there, there's no more buying on NZD, because that would create a structural retest on the last low that was broken on that bearish movement. So looking at it from a daily perspective, guys, two ways that can come about. That is the impulse, in which if we do fail to break above the 70.42 handle, this formulated on the smaller time frames, which will show you a reversal pattern, in which if this does continue to drop, we are going to expect at some point that trend to break out, some type of pullback, and then you could look to run it back down to the lows of the range. Please factor in you are range bound. Once that does break, you could expect another drop straight to the monthly support. Now, if this does still continue to hold, and let's say it does break out, pull back, let's say it keeps rallying all the way to the weekly resistance, you're still treating all of this as relief. Look left, right? And you can see here that we did have a previous range of support or bullish orders, in which now we are expecting a lot of bearish pending orders to be sitting near there. So looking at it from a 4-hour time frame perspective, simply two ways. And so some of you guys were able to catch this New Zealand dollar trade after that impulse was made. It did show a nice reversal pattern, in which if any of you caught that previous low in the 1-hour time frame, shout out to you guys. And so looking at it as of right now, two ways to go about it. You either break this low, and you could look for a small retest, stops, move to break even once you get to here. And then from there, you could expect one more drop to the ascending trend. But once again, you don't want to be trading that anymore, because this could be treated as relief for potential rallies back to the tops. Now, if that doesn't happen, you're going to expect the drop. The real sell starts below the monthly support, followed by a pullback. And then from there, you can expect one more drop down to the base of the range. Remember, this is consolidated. Now, if that doesn't happen, looking at it from where it is as of right now, potentially could rally up, small pullback, and then from there you could target back to the daily resistance. Failure to do either, guys, will just warrant consolidation, and that should not be something that you guys are interested in. And with that, guys, these are the $6 index setups that we are looking for the next 12 hours, next 24 to 72 hours. And so with that, guys, I hope you guys enjoyed this. And so now we're going to be getting into the questions and answers. You guys, if you're new to how the webinar works or how I do the questions and answers, you guys can ask anything. If you want me to review any trades, or you guys could share your screen, I could review, look at some stuff, or really just answer anything that you guys may need. So I'm going to be on doing the questions and answers for maybe next 10, 15 minutes. So by all means, guys, you guys can unmute your mics if you guys want. Completely up to you. So if you guys want to get into it, if you guys want to ask, completely up to you guys. Peter Pablo asked, is it as simple as waiting for a higher low to break to take a trade? Not necessarily, my friend. There's a lot of variables that go into taking a trade. You know, you have to factor in the environment that structure's in. You have to factor in, you know, what potentially is causing structure to consolidate. In a basic answer in reference to trend continuation, all your, you know, what warrants a continuation of a trend is either higher highs or lower lows, right? That is in reality what trend continuation is. See, the one thing, and it's a good question that you asked this, Peter Pablo. The one thing that I see all the time on social media and stuff like that is people pride themselves on these wick entries. You know, I pride myself on the fact that I'll be able to survive for the next 20, 30, 40 years from a psychological standpoint. Consistency and statistics are everything in this game, and take my word on that. And why am I saying that? Not saying that sniper entries are bad, guys. But what I'm saying is that if you put yourself in an environment where statistically structure should continue in X direction, it doesn't matter where you enter, as long as you're not entering, you know, at a weekly area or a monthly area. If it's just a normal trend continuation play, it don't matter where you enter, as long as your stops are below or above previous highs plus some breathing room, and you just put yourself in a general area where structure should continue, you're good to go. Who cares about drawdown, right? But people care about drawdown because the risk is not, you know, on point. And on top of that, they don't like to see their capital, you know, being lost, which is completely understandable because you guys have sweat equity with it, right? But, you know, in the end of the day, just to answer your question, Peter Pablo, you know, for taking a trade, it's you can't just pull the trigger once a high or low breaks. But, you know, looking at it from a trend continuation perspective, you know, that is a simple way to look at it. I'm sorry I can't give you a straight up answer because it's the whole methodology and how I and my students, or me and my students, I can't even speak anymore, but how our students and I go about our trading. And so, what's up, Shabby? You want to mute your mic, legend? No? Yes? Maybe so? I don't know. I kind of, you can't. What do you mean you can't? There you go. No? Did it work? Oh, I'll mute you. That worked. Did that work? Shabby, I think your mic's muted now. Or maybe you just don't have a mic. Ah, you just don't have a mic. I got you. No worries, legend. How you doing? Okay, I'm glad I answered your question, Peter. But yeah, guys, if you guys have any other questions, fire away. By all means. That's what I'm here for. But thank you so much, guys, to all of you guys who stayed on the webinar. It was really, really awesome. I had a really good time. I just love going through this and then breaking them down. So, but yeah, guys, if you guys want to mute your mics or ask about analysis or a question, whatever, I'm more than happy to do so for the next 5 or 10 minutes. So, but meantime, who we got in here that joined in? I think we got close to 40 people, which was cool, like 40 or 50, which was good. I think like the high, and like everyone dropped off like 45 minutes into it, but that's all right. We got Mohammed, Mr. FX18. Yeah, okay. Shelby said EU sell will be valid once weekly support will break and close on daily or monthly support. Yeah, if you see, Shelby, you want a daily break below this, continuation on the 4 hour, and then from there you could try to run that down to the monthly. You good with that? Does that answer that, Shelby? Okay, good stuff. Chris Legend, do you have your mic with you? I know you got the Mexican peso on wrap. I saw your analysis. It's solid. If not, it's all good. I'll break it down. I just like people that have mics. It just makes it more entertaining. I don't know. It's what it is, though. I will if I can. All good. All right. Chris, what's your bias on it real quick? Long, right? I think you're long on it. Yeah. All right. Let's go. Wow, the Mexican peso is in some serious depreciation right now. Ah, no bueno, no bueno. Okay. As of right now, this could potentially break the tops. That's very possible. Oh yeah, I didn't even realize to say no bueno with because it's Spanish. My bad, guys. I didn't listen. I'm of Spanish descent, so but yeah. So the lows didn't break. That was really nice liquidation that you saw there. Now you're seeing continuations of it, hence a 1, 2. If the 3 breaks the tops, that's going to turn into a 1. So shout out to you, Chris, getting the big pips. But looking at it from a weekly time frame perspective, no, let's just go daily. We just have to look at it from there. But okay, yeah, that's what we really need to see. Cool. So looking at it, I got no analysis on this, so we're just gonna go naked charts on this. We got this low. Do we break above? Ooh, Chris, analysis is even better. I'm saying Chris, who else needed this? Chris and who else asked for Mexican? Bernard. Yeah, you guys are good to go. So as of right now, these are your 3 key levels. Let's start. Let's just label them and go into smaller time frames. So you had 1 that we broke, 2 that we broke, and then you got the tops. Okay. Those are ideally your areas of where you could expect some type of pullbacks from. Now, one thing to factor this in to whoever's interested in this. This is very extended. You know what I mean? It's a nice channel, but that's very extended. At some point, you're expecting that. That won't state that you're in a bear market, but it needs to liquidate. Has to. And so looking at it, one thing to factor in is that this is forming another reversal pattern, right? Rather than continuation. And so looking at it, let's see. If you didn't get in already, you probably want to see what's going to happen, but this is ideally what you want to see. If this still holds, you're looking to ride that as much as you can all the way up. But if this falsely breaks, watch that low. If that low breaks, just that's not your trade anymore. Because this at some point will pull off. First low. Sorry. So yeah, if you're in and then you see one candle falsely break below, just close for small loss. Make sense? We good with that? Okay. Good stuff, Chris. Shabi, you said you had daily support at 117.72, which got broken. We still haven't broke the recent higher low based on the structure. Let's see, Legend. Support broke. That's resistance broke. That was support. Break. False break. Break. We got daily resistance now there. On there. And no worries, Bernard. You had daily support 17.72. I got daily resistance now there. Yeah, which got broken when we still haven't broken the recent higher low of the structure. Do you mean? Oh, you mean, yeah, this, right. That's exactly, Shavi. Yeah, that's it exactly. And once we see that break, then you can start saying that this is now invalid, which is why if you look at my analysis on the setups, so like here, I'm going to pull it up real quick. Yeah, so look when I sent this setup right here. Can you guys see that? Yeah. So look, Shabi, do you see why I was saying everything needs to be below the monthly or above? Because I need to state that this is invalid or falsely broken. And at the same time, I want to state that if we close below here, then this is now falsely broken and we are definitely continuing to the downside because you don't want to trade in this. This is just not, it's not something you're interested in. Does that make sense? That's what I'm talking about, Shabi. Shout out to you, legend. Damn, Shabi, I've done so many sessions. He's got my whole brain. No, I'm just kidding. Shabi and I've been putting in the work. Shout out to you, legend. Really chugging along. Really proud of you, boss. And so, but yeah, guys, if you guys have any other questions, by all means, for the next 5 minutes or so, go right ahead. But yeah, Shabby, I think, signed up with me like 5, 6, 7 weeks ago, something like that. Yeah, Shabby's the man. He's always helping out in the group chats, always. And I really appreciate that. I really appreciate that from him. But yeah, Shabby and I have the best sessions. We just joke around, go over setups, so it's really a lot of fun. But that's why I love all the sessions, all the one-on-ones, or even the live trainings I do with all the students and stuff like that, because everyone's on the same path, on the same level in the sense of understanding price action and stuff like that. So it makes it a lot more fun. There isn't, 1,000 different ways we're approaching the trade. And so UJ made I saw that. That's what we spoke about yesterday, right? We were like, it's going to tag that and it's going to potentially pull off, but it hasn't done anything. You know what I mean? Like it should still continue to move up. But yeah, that's what Shabby and I were saying. UJ was trying to tag this low right here, guys, yesterday. And we were like, even though it's you are looking for buys, it probably is going to pull off from here. It has to, you know what I mean? And so it makes sense now. If this breaks, notice how either this is forming reversal within the channel and we're going to start cracking, or the news is going to cause that. Or it might just cause a big wick. I don't know. Just get popcorn tomorrow and just watch. Yeah, 111 is your number. Yeah, that's your number. We cracked that. You're good to go. But yeah, my suggestion, guys, get some food, get something fun to watch, get something that you like to eat, put some music on, just watch all the people try to trade this, because I highly suggest you should not be, right? Protect your capital. But Mr. FX18, what was the comment that you said in the chat room today? It was like safe trading is what was it? I forget what you wrote, but it was really good what you wrote. And so, but yeah, guys, for the last couple of minutes, if you guys have any other questions, by all means, go right ahead and ask. Oh, we got Steven in here as well. What's up, Steven? Been killing the game. Been ripping pips out of market left and right. All you guys have. You guys are the best. Then we got Clarence up and coming. Clarence been holding it down. Yeah, oh, that's right. He said safe profits are the best profits. That's right. That's right. Yeah, so that was a really good quote. Safe profits are the best profits. And so, yeah, that was really, really well said. And so, yeah, guys, if you guys don't have any other questions for me, then I guess that will conclude this webinar. First and foremost, just want to thank you all out again for sticking with me through this webinar. I know it was about an hour and 30 minutes, and I really appreciate that, guys. If you guys are not aware, this will be uploaded on YouTube, and so you guys can find my YouTube at ThatFX Trader. It's just like my Instagram name or anything else. And so I will be uploading the full-length version as well as the highlights, which just goes over the dollar index pairs like I do every week. And so will be uploaded later tonight, guys. But with that, guys, if you guys need anything, if you guys have any questions, need any help or anything like that, I'm more than happy to do so. You guys can either contact me on Instagram or Telegram at ThatFX Trader, or by email, thatfxtrader1@gmail.com. And so, those are probably the best places to contact me. Telegram's the best. And so just want to say thank you so much to all of you guys. Really, really appreciate coming out every single week, and I appreciate the support. And so with that, thank you so much. And so real quick before I get off, just want to shout out all the guys part of the course. You guys are doing unbelievable. I know it's a word that says a lot, but we are just like a clockwork team. Every single week, it's just the same results every single week, just consistency. And so really, really proud of you guys, So with that, guys, keep chugging along, keep ripping pips out of the market. And so I hope you guys have a wonderful week. And I'll see you guys all in the next webinar. I'll speak to you guys soon. Later, guys. And so real quick to all my students, live training, email was sent out. So Thursday and Saturday, we got our 2 live training days. So if you guys aren't aware of that, let me know on Telegram. Besides that, guys, have a wonderful rest of the week. And I will see you guys all later. See you guys soon.